So your question might be, how does the Moody's downgrade actually going to affect mortgage rates and interest rates in general? And then is the beautiful big tax bill actually worth all the salt that they're putting it through? That's what we're going to talk about in today's video. The whys behind this is, I'm trying to figure out for you guys, what the heck's going on with these things over here? Because if you're watching my video, you're most likely looking to buy or refinance your home. So that's what I'm trying to explain today, what's going to go on with these things and the whys behind it. So my name is Dan Frio. I actually do this report 2 times a day to explain these things to you and the mortgage programs and all about real estate. And the reason being is I'm actually a federally licensed mortgage loan officer, licensed in all 50 states as well as Puerto Rico. I would love to win your business if you're looking to buy or refinance. So let's get over to it. Let me go over what today's headlines are and how they will be affecting these things right over here. So Moody's came out on Friday, and I know I beat this thing to a dead horse yesterday live, and I just kept repeating myself, so I apologize about that. But I just want to explain to you guys what Moody's is, how they do things, and are they pretty accurate? Unlike, I watch a lot of times the ADP payroll numbers, and I'm like, their numbers are never right. Let's actually focus in on Moody today and see how accurate they are in history. Then we're going to go over to the big, bold tax bill that's passing Congress. It will pass in the next few days. I think most of Republicans have jumped on board there. And then we're going to go through the headlines in the stock market. Basically, all the indices, I'll say these are flat as a pancake, but we have Treasuries inching up a little bit today. So let's get back to the beginning of this thing. Moody's downgrade. So who is Moody's? What do they do? Why do people care about their rating agencies? Okay, so there's rating agencies out there that actually, they monitor bond markets and things like that. And they actually stamp these things with the quality of bonds that they assume that they are. Meaning, if you want to buy a AAA bond, that means there's probably almost zero chance of default. Kind of like the U.S. government. It had a AAA rating. Well, now it has a AA1 or something like that. What does that mean? Well, the debt was downgraded a little bit, but I still think we have the world's highest rating when it comes to bonds. So that was a hiccup in the market, but I want you guys to understand Moody's past. Okay, Moody's in the past, I'll go back to the subprime days, and that's what created the whole debacle, and that's why we debate every day, is the market going to crash or not? Because if you go over history, the biggest blip in the radar for housing is 2006 to 2009 or 10. Okay, and everybody uses that as the poster child of houses are going to crash again. It's only happened one time in history, folks, and the reason being is they played a big role in it. What happened is Moody's would stamp these subprime mortgages, and folks, I was in the mortgage business at that time, and yes, we did them because there were products out there, and people were gobbling them up. So, I'll take part blame of this, but it was a product that was available. I basically looked at it at some point as like, well, if I don't give it to them, lend them the money, they're going to go to another bank and get that money. So, I got to do my due diligence, and I have to do my job, and I have to do loans. So that's what we did. So these loans, I even knew they weren't AAA rated bonds, and that's why I never bought these bonds. Okay, but Moody's came in and they said there is basically almost no chance of default on these things, so we're stamping them AAA. So you had investment funds all over the world. You had pension funds. You had governments buying this stuff because yields were high and supposedly the risk was low. Okay, so then to find out, in 2006, they came out and said, we're going to downgrade the subprime market. And that's when everything happened. Okay, that's when all the rates started jumping, foreclosures jumped, and that was basically when the bubble burst. Okay, are we going to see that now? No, you're not going to see that now, folks, because they're not AAA rated. There's not even subprime mortgages out there anymore. And if you get anything, even in the realm of a subprime loan, you have to put a big down payment down. Okay, what happened in the past, subprime loans, they were basically 100% loan to value. If you had a 620 credit score, you can get a NINA, and that's no income, no assets. And it was basically, you could get an 80% loan. So you'd have to put down 20%, but they came up with this genius idea. Well, we can also give you a 20% second. So basically you're taking a first and second mortgage. It was 100% loan to value, no money into it because you can even finance your closing costs. So then soon as Moody's came in and downgraded all the debt, the housing market stagnated and started to go down. But then people were like, okay, I can't refinance out of these things because they also included teaser rates. They were adjustable rates that you didn't even have to make the interest-only payment. You can make an interest-only payment. You can basically call your payment. You can have a negative amortization, means you don't even make enough payment in the month to cover your interest. Terrible loans. So they eventually imploded. And this is what caused the debacle in 2008. You have to understand that part. So since that time, underwriting standards got really, really tight. So now if you're looking for like maybe a no-doc loan, like you're looking for a DSCR loan, you're an investor out there. There's programs where as long as the property cash flows, you qualify. Okay, so we don't verify your income. Basically, when we get the appraisal done, it does a rental analysis to show you how much money the rent's going to receive. And as long as that rent is equal to or greater than the mortgage payment, you can get a loan. Well, you're probably saying, okay, that's another dumb loan, Dan. Well, no, most of those require 20 to 25% down. Okay, so if you have, let's say you buy a $300,000 home, and you had to put $300,000, let's say, and you put 20% down. That's $60,000 plus other costs. So you're going to have $75,000 into this home. You're most likely not going to walk away from $75,000 or $100 investment in that property. However, back in 2008, because everybody was basically at 100% loan to value or more, there was even home equity loans going to 125%. Yeah, I'm not kidding you. Look it up. So that's what happened. So is it going to happen again? No, it's not going to happen again. Can house prices drop? Yes, they can drop. It's supply demand, folks. So I was just in Florida. What I was trying to show you guys is there's units for sale. So when I went up and down the road on Sunday, I was looking at all kind of properties, and some of the buildings had 2 or 3 units for sale. Not a lot of homes for sale. So I asked some people, what units are available? And everybody's like, the first floor. You get to the second, third. Once you can get an ocean view, you can't really buy them because they're not available. The ocean floor is the ones that are going. So that's kind of you still have people saying the market's going to, plummet. If you love those videos, please continue to watch them and let me know how it's going for you. So let's get over now to the big, beautiful bill. This yesterday, I think, came in around noon, and it seemed like it was going to pass, and then the market turned from there. I'm going to show you what happened in the market yesterday. We have the MBS right now down 27 ticks. No reason for it. Okay, there's no financial news come out. Let me go show you the economic calendar. So here's the calendar we have for today. All you've had over the last 2 days is Fed officials talking. Look, Bostic speaking, Williams speaking, FOMC Kashkarian speaking. Today we have Bostic speaking, federal member Daly speaking. There is no financial news out today. So if you've seen the market dropping like this, what's the cause of it? Well, here, let's go over this one first. Here's what the trend was, and this is a 2-day chart. This is where we started out yesterday. So Monday morning, because of the Moody's downgrade, you have to understand this piece of the puzzle. Here's what happened. The MBS market plummeted. Okay, what happens? What are you seeing right through here? What you're watching here is an MBS. This is a mortgage-backed security. This is a bond that trades on Wall Street, but it's a mortgage bond. Okay, what you're watching here is that you're focusing in as the chart. This is the price of that bond. As the price goes down, rates go up. Okay, so here's what we saw yesterday. Let's just go to, yesterday we saw this because the market opened right here. You can see where the market opened today, and it's on its trajectory all the way down again. But the market opened, and then in the morning, some news came out, and I think it might have been some breaking news on the settlement on the big new deal, the tax plan. But everybody just kind of brushed off, and it went up, up, up. As it's going up, folks, rates are coming down. All these blips right here are mortgage companies that we use, most of them we use, saying, rates are coming down. They're reposting rates. Now, here's what's happening today. 28 points down. But there's no news. So you have the big, beautiful deal looks like it's going to go through. Let's get over to the other headlines that we see on Wall Street. So we right through here, the markets are, they're moving a little bit right now. We got the Dow Jones down 135, the NASDAQ down 153. Any news through here? So let's look at the main news that we're going to see. As a new report shows staggering AI crash, Home Depot CFO says retailers don't plan to raise prices due to tariffs. Well, we haven't heard that from anywhere. And then you have to watch an interview last night. It was Secretary Besson, and he was on something State of the Union or something, like 2 interviews, and they're way left wing. And every time they came out with kind of this thing saying, well, he basically came back and said, no, you didn't explain that right. You have to watch that because he puts a lot of these things into context. They came in and said, the Walmart, for example, Walmart's saying that the tariffs are going to kill their revenue. Well, he's like, well, I'm a good friend with the president and CEO of Walmart, and I called him on Sunday, and he just said that was in his earnings call saying, and he has a legal right to say this or a legal obligation, tariffs can play a role in the inflation and in our prices. So we might have to pass him along. And basically that was his comment, but all the media took it as, well, see, he's passing along. But then when you clarify it, he said, no, in the earnings report, he has to come out with, he has a fiduciary responsibility. He can get sued if he doesn't cover his kind of ass when it comes to these things. So that's one piece of the puzzle. So you have to understand these things. I would highly suggest watch some of these interviews with Secretary Bessent. Fantastic interviews. Okay, so you're going through here. Is there anything, we don't even see anything about tariffs or anywhere. China exporters are offering sweet deals to U.S. businesses. Let's get over to the next piece of this puzzle on Yahoo Finance. Just see if there's anything different here. Trump tax bill math is off. Well, all the media is going to say nothing adds up. But here's what we don't understand. The tax bill is going to reduce taxes on people. Okay, but everybody's saying, well, tariffs are going to increase prices on everything. So Bessent's saying, okay, so then let's pass this tax bill that's going to reduce taxes so the burden on the consumer is less. So think of it this way. If the prices go up 5%, but your taxes go down, plus your energy bill goes down, plus other things go down, will it offset? That's what the Trump administration's saying. But the other side is saying, no, the math doesn't add up. Only time's going to tell, folks. But if you also go through here, let's see. Home Depot stock rises despite missed earnings. South Africa offer Musk Starlight deal before Trump things. Crypto scores victory as stablecoin passes key hurdles. So these are, you don't really see a lot of things over here saying the world's going to end. So I'm not really sure why the bond market is crashing right now. So bonds are down 28 ticks right now. That means mortgage rates are going to go up, and we will be back above 7% today. There's really no reason for that today. Otherwise, there is a huge cloud over us, but there is no major event today that's really should be shocking all the markets that we're seeing so far. So let's go back to it. The bond markets right now is down 27 ticks. That means mortgage rates are going to go up. We have the markets overall in general. They're in the red. So I'm not really squeamish yet. We only have, not even 0.3 or so. We're only at 100 or so down through here. Bond yields are ticking up a little bit, but on the economic calendar, nothing today. Wednesday, we have crude oil futures, another Fed official talking, but we do have a 20-year bond auction that I'm going to pay attention to. The 20-year bond auction, last time it ran out at 4.8, and this is the reason why, folks, mortgage rates aren't going to come down to 4 or 5% because you have bonds right through here. You have 20-year bonds that investors can buy at 4.8% with basically zero chance of default. So mortgage rates have to be at least 1.5%, 1.5 plus this. So you're looking at 6.3 something. That's where rates should be on the mortgage front. But because of risk premiums and everything else, that's where you're seeing rates are right now. So folks, so that's my report for today. It's a little lengthy, but I wanted to catch up with you guys because the headline news right now is Moody's. I want you to understand that. And the big tax bill that's going through hasn't passed yet, but we'll discuss that in one of our later events this week so you can understand what's in it and how it might affect you guys out there. So the reading for today is mortgage rates are going to go over 7%. What the future brings, you have to stay tuned every day so I can explain it to you. So thanks for watching, folks. I will be back later today with the closing bell, but my name is Dan Frio. I do this report actually 2 times a day, and the interesting thing with us here is our slogan is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do I do that? Well, I'm actually a federally licensed loan officer. I work at a federal bank. That's what I do. But our bank is unique. We're one of only a handful of banks in the whole country that do this. We've set up with 33 other banks behind us, or lenders, I'll put it that way. So this gives you the opportunity of coming to our bank and applying here, but we're going to offer you rates and programs from our bank as well as 33 other banks. So instead of you guys out there calling and trying to get the best rate out there, let me handle all the hard work for you. If you're also a homeowner right now and you're looking for a time to refinance your home, we created a tool down here for you. It's called the RateWatch. You can plug in your information. I'll actually track this for you. We don't sell the data or anything like that. Basically, I'll track it as soon as rates hit your sweet spot where you're looking to refinance. I'll give you a call. So check out just some of the 3,000 videos we have on YouTube that we handpicked to put in right through here for you guys to learn real estate. So thanks for watching, folks. I'll be back later today at the closing bell to let you know how all this mess ends for the day. Thanks for watching. Take care. Bye-bye.